What's going on, YouTube? Welcome back. The Donald in action for this New York Live. All kinds of goodies happening so far. Pretty crazy. All kinds of executive orders ripping out. Gonna have to keep an eye on a few things, especially energy. See if any of the big boys start moving and shaking here. Let's just take a peek here. Take a quick peek here. What's going on with the big boys? Chevron, look at that, up 1% already. Pre-market down though. All right, so Chevron was up 1% yesterday. Pre-market down. So, that's interesting. That's interesting. Now let's go check out the big boy. ExxonMobil also trading down quite a bit, so that they might be pricing it in for a bit of a pump here. The how that goes. Let me know in the chat with a thumbs up if you can hear me, please and thank you. And let's get into this right away here. So that's I would just watch those two pretty carefully here. Other newsworthy events is going to be next week. We start to get some financial result coming out. So Tesla's earnings are coming out next Wednesday. It'll probably happen late in the day. So watch out for that stuff. Big market movers coming out in the next few weeks. All right. So let's get on to the Bitcoin here. So here we are. The move did take the high. So All of those who said yes in the poll last week, you were absolutely correct. And for those of you who said no, you know, all right, we can't get them all right. Can't get them all right. Let's see here. Let me just see this. I hope you can hear me. Nobody's saying anything here. So hope you can hear me. Anyhow, so what we're looking at now, we've obviously, you know, I've just marked out the range high and the range low here. Pretty self-explanatory. And now we have our range low and our range high, and we have found here support on that zone that we had talked about last week. Hey, Mr. Unknown, hope all is well, buddy. So that has happened, worked out, and we're printing out this awkward sort of Adam and Eve here on the 1 hour time frame. So might be going out. I'm good, man. Thanks. Hope you're doing well. So a little bit kind of suspect here that we haven't come down and actually tested this low, but it is a selling tails, or sorry, buying tails that we just keep building off of this. So if you're looking on the 30-minute chart, it might be a little bit easier to spot that. But you know, we've got a small selling tail. Then we created one here. Now we've come in and hit it, and so yeah, I might be able to do a favor. Sure, I might. So that is kind of where we're looking at here, right? So right now, the equilibrium seems to be holding, right? Which is the midway point of this. So let's see if that holds. I was really hoping it would come down and kind of test this low really well, but it hasn't done that. So right now, all signs are pointing to just sort of being range bound, but you never really know. Okay, in the absolute future, near future here, let's get this down to a little bit of a lower time frame. We do have this order block up here. All right, so in the golden pocket order block, this might be a good little place for a turnaround there. What I'm really interested in is this level down here. We had talked about this on the last stream, but it's been modified a little bit as we got a higher high. So in here, we've got a golden pocket, a TPO naked point of control, a daily time frame 50 EMA, and the January 15th initial balance. Good to see you, Sos. What's going on, buddy? Oh, it's not really what I wanted. So yeah, that would be a great place to be looking for a hit into that zone there. Don't know if we'll go down there. Nobody knows, right? Who knows what's going to happen here? But it is quite usual that once you break a high, right, we've broken that high, we've come back below. So very typical that we get a decent retracement off there. Now the 0.5 retracement is definitely enough, but who knows? We'll see how that goes. So for me right now, that is the big level that I'm looking at right down here. Sorry, right down here. I'll give you the exact prices there. It's in between 96,139 to 97,013. At the end of every session, can you share a chart and with levels and little description with it, if you don't mind? At the end of every session, I mean, I'm sharing it right now, but I can put it, oh, in the Discord. Yeah, sure. I can do that. I actually posted this in the VIP section under my little channel, the Unitrader channel. So it's there right now, all of this stuff. By the way, if you haven't, join our Discord community. The link is in the description. Okay, so that's pretty much what we're looking at on the Bitcoin, right? So coming up to the order block up here in that golden pocket, it's a potential little little situation there for us to be looking for a potential short. And it'll be very interesting to see how it reacts, if it indeed does. All right, everybody knows that I'm a big fan of the golden pockets and fib ranges in general. So yeah, it will be quite interesting to see what happens when we get up there. All right, the much anticipated inauguration has happened, where everybody was expecting a bunch of volatility for some reason. Not really sure why, because everybody kind of tunes out and is just watching that bizarre nonsense, the ballroom dancing and whatnot of the transition of power. So now that that's done, it's kind of business as usual. But again, we are, it's a pretty slow news week, other than kind of the crazy Trump executive orders that have been put out. So it'll be interesting to see how the market reacts this morning. And when I say this morning, I mean the New York morning. For those of us in Europe, it's already afternoon, but that'll be pretty interesting to see. All right, the Nasdaq is well, the futures are well on their way. All right, had a real nice pump here. Came down and took out the previous day's low here, and off we go to the races. All right, so it will be interesting to see if we can take the high here. Now, on these previous days that we get no real, like not a full market day, as everything was closed yesterday, so even CME closed early yesterday, it's quite common that you can take both sides of the previous day. All right. So in terms of our 80% rule of once you've swept one, you don't sweep the other, that's kind of out of the table for now. All right. There was a couple of really decent trades on the Nasdaq today already. So there was that strategy that Quest for Nothing is working on, which seems to be pretty solid, especially in terms of risk reward ratio. Pretty solid. Now it's a bit of a hit and miss, but there's definitely enough there to start kind of looking at it for at least a confluential factor. And the one thing that happened today was the on the big three that hit. Right, so this hit right here, we had broken above, created a nice little negative space there, come back below it, get our signal here on the stock, and then price starts to move away. It was right on one of those levels, like dead on. So in terms of using it as confluence, we can kind of talk about that later in the Discord if Quest for Nothing's up for it. But definitely something to kind of keep an eye on. All right, so that's really where we're at, I would say, right now. Really looking for some continuation to the upside right now on the NASDAQ, but we got to see how New York opens this up, see if they get bullish. But I wouldn't be surprised if we have a big move either way today. Again, Bitcoin, this is our big zone down here if we lose this zone here. All right, so this is a very interesting zone here. All right, I'll just talk about that a little bit. Again, we've got the equilibrium point. We had all of that confluence in here that we talked about last week. Was that last week or on Sunday, whenever it was, but it hit into that zone perfectly, took the high, and now it seems to be holding. And if we look back, there's some definite evidence as this being a nice sort of support and resistance zone. All right, so this could hold. It doesn't have to come down here, all right? Could definitely hold, but there's also some great liquidity sitting right around here, right? Okay, if we check out the volume. All right, you had some good down volume and then decent volume here. Not huge, right? But it's definitely a nice little pool of liquidity that we could come up and snag here. But if you look back here, right, it looks much more interesting to come down here and take out this zone, right? That's the way I would see it. All right, which doesn't mean we have to get down there, but that's what I'd really like to see. Okay, Mr. Unknown, it's also on YouTube. You can watch it after, right? But there is a chart. I have put it in there, don't worry. You just have to look at my channel in the VIP section. my TA channel. You'll see it all in there. Okay. So what do we got here? 20 minutes before the open. The other fun thing has really been that crazy the Trump meme coin. So pretty fun, not gonna lie. It's not really that difficult to trade. It seems to really be loving the big three. Actually, it loves it. And also the fibs are pretty simple. Pretty simple. So if you're just using any sort of momentum indicator with it, it responds real well to the stock as well. It's pretty nice. So, you know, get a little break below, finally holds, starts going, and then even on the way down, it really does seem to like fibs so far. So that's a good sign. Does that mean it's always going to happen? No, right? But for now, you can be making off like a bandit on this, just simply trading these quick moves. Like in a couple of minutes, you can be really up. So once again, break above that golden pocket, break back below, comes back, retests, starts going. You know, not perfection. Some of them do hit perfectly, but that's the nature of fibs. You know, nothing is perfect. And then if we look at our big three here, that's what's really interesting for me anyways. I mean, it just, it's pretty rock solid. You're underneath the big three, you start pushing away, comes up, gives you your signal on the stock, get your bearish candle, hop on in, same thing. This one is a little bit trickier. All right, but what's going on, Builder Bob? A little bit trickier here, but you don't really get any great candles for the downside here until you get up here. You get your doji, then you get your engulfing. Here, I mean, there's not much there, right? No reason to take a trade here on price action. So, and these moves are absolutely monstrous. So within a few minutes, you're up like a couple 100% sometimes. Look at that. 13% in, you know, like 20 minutes. So pretty wild. Right? Quite a bit of respect. Comes back up, and now you start to get some sort of fake outs here. All right. Once you get to this zone, that would be your entry candle. But now you're trading above all your EMAs and you've got these pointing up. So you wouldn't really be too interested in that, right? Not really too interested. Okay. So pretty fun stuff. Pretty fun stuff there, I gotta say. It's been, I mean, I've taken 3 losses on it and I've got about 22 winners. So it's pretty wild. Pretty wild. Let's take a quick peek at the old ETH. Everybody's favorite mule to lose faith in, the old ETH. So starting to look like things could be turning around for the ETH, but let's see here. We should, you know, we really should be taking out these highs here. Right, that's the way I see it. All right, we've hit into the golden pocket. We come up, get past the green pocket, and, you know, all signs are pointing to, yes, we should be going. Come down for a big retest. So it's just kind of looking for that liquidity and that momentum it needs to make a move here. But all signs point to, yeah, we should be going here. All right, that's what I would say about ETH. So the big shakers then today, so far, AV just keeps going. It looks very, very good. And then everything else is kind of stalled out here. A little bit on the negative, mainly green. Link also taking a breather. Mint. Yeah, nothing really ripping like it has been for the last couple of days. Meme coins. Then you get to meme coins. So forget those. So we'll be interesting New York Open, I believe. After yesterday's break, let's see if they come back with a vengeance here and start to rip it up. Okay, any questions? You guys got any questions you want me to answer in there, or anything specific you want me to look at? Let me know. I think Pepsi also has earnings coming out next week. Let me see here. No, it's in February. All right. February 4th. February 4th. Yeah, all right. There's Tesla Wednesday, Microsoft on the 29th, Wednesday. Right, so the big earnings reports start next week. That's always fun. Yes. Meta as well. January 29th. So that's not next week, sorry. That's the week after. You see that? Let me make sure I'm reading that right. Yeah, the 29th. No, that is next week, yeah. So that'll be big. Netflix coming out tomorrow. Well, it's coming out today, but tomorrow it will be affecting price. Joker in. What do I think of MSTR? Come on. Come on. What's going on here? Oh, coming out of that W. Ooh. Hmm. That's still got a good ways to pump there. Wow, that would have been a great long yesterday. Take a peek on the lower time frames real quick. Look at that. Caps up, comes down, back up, right on that potential W formation peak there. Take a quick peek at what this hit off of here. Ooh. Yeah, it could be printing up a little bit of a funky Gartley here. Something like so. Yeah, so what I'd say is you've got quite a bit of room to still go up here on the higher time frames. The momentum is saying a lot of way to go up still. Are coming off of some pretty nasty dips there. Let's take a peek at the old money flow. That's looking kind of neutral. Looking a bit neutral, but yeah, I'd really pay attention to the 886 on this pullback here. Maybe even the 786. But I'd really be looking at the 886. That'd be very interesting. So from this high, from X to A, look for that 886 pullback into that. And then as far as trading it for day trades, if we, just rip it down here. Friday's closing range. So, that gap is a little bit suspect. Take a peek at what's right behind us here. And that's pretty clean. Really, that gap is what's kind of holding you back, and there's really nothing to stop you before you close in that gap except these wicks. But if you look at the bodies, they're pretty much right there. So the gap would be closed at the bottom of this candle here. Might close. It might not get all the way down there if it goes. But I'd be watching to see how price reacts right off the open here. So here's our Friday's close, right? So that'll be the real interesting level there. We got 6 minutes. Let's see if it opens up in pumps or maybe hits and then comes back down for the potential close there of the gap. But if you can find a good entry for a day trade, this does have quite a ways to go still here. Oof, that looks pretty good on the 4 hour. That's not a great look there. Potential hidden divs, but that's only if it turns around here. It can easily go for that. See if we can find some confluence for that 886. No. Got the 0.5 there. That's what, $4 difference, $7 difference. That's quite a bit, but nothing a quick wick can't handle. Yeah, but it definitely looks bullish, man. That's what I would say. Now it's moved quite a bit already. So a bit tough, but yesterday would have been a golden opportunity off of that potential W apex high there. Tested it perfectly, and it's also a beautiful way to look at gaps. I know I've said this before, but oftentimes this stuff bears repeating. So when you get a big gap like this, my first interest is 0.5. So from the close to the open. All right, that's my first zone of interest. That I shouldn't say it's my first zone of interest. It's the thing I do right off the bat. Pull a fib and look for that 0.5, and then look behind me for highs inside of this gap, which is pretty wild because this is the apex. All right, price opens, comes down, and then starts trading above it. So that would be the second zone, and then you're looking for the 0.5. Sorry, this would be the first zone, then the 0.5 would be the second, and then you're going to be looking at that high right there. There's really nothing else. Ooh, that's pretty nice. Pretty nice, I'm not going to lie. What do we got here? 2 minutes, and then I'll get off of this. And then the other thing that's very obvious here is that you've got this gap here, right? So from here, this is where it opened, pushed up this high, right up to the close there. That is a big gap, right? And so what does this give us? Gives us that long island, right? So if price comes back into here, it definitely doesn't have to fill this gap in. It can find support anywhere here and then turn around. So pay attention to that. This whole zone here could be quite rewarding. That's what I would say about that. But it definitely looks bullish, man. Looking good. Marius, it just follows BTC, doesn't it? I imagine you're talking about ETH, and that's a yes and a no answer. It does until it doesn't. If that's what you're asking about, but I think that's likely what you're talking about here. So if we look at it, it looks relatively the same right now. Yep. Except the high we put in on ETH was on Friday, right? So a little bit of difference, but not much. Let me just get this on Bitcoin, slap on the 1 minute chart so we can watch. Oh, no. No worries, Joker, no worries. Yeah, no, MicroStrategies does not just follow Bitcoin. Like it'll be a little bit similar, right? But it's not like it's not a following. So here we can pull that back up again real quick. Oh, here comes the New York boom. So let's just quickly mark out here. Our pre-market low, sorry. See if New York's going to give us any indications of where it wants to take this bad boy. Yeah, pre-market high. Looks like it should go down. Let's see if you're back up here. All right, so if we look at this, we'll take a peek on the daily chart here. All right. And then we'll take a peek at, I'll put it on this chart here. All right, so you can see it's not, you know, they're not like joined at the hip, right? So I would say that no, MicroStrategies and Bitcoin are not, they don't just, it doesn't just follow Bitcoin. A bit of a different beast. And it never really has those like crazy, shockingly bad sort of pullbacks that crypto does, right? It does have big pullbacks, but It's in a bit of its own league, I would say. So let's take a quick peek here at the bit. No, you're still going. See these guys put in their opening ranges. All right, like to see that. So look at that, Bitcoin. New York, opening volume looking great. That's always good. Always good to see when people are interested. Be nicer if it was moving up, right? But can't always get what we want. But I'd really like to see a hit down here. That would be fantastic. It would be fantastic. I didn't get the best entry on that move up, so I'd love to get another crack at that. And if we do break the $100,000 mark, then everybody's going to start getting real bearish again, which is always good. So then we can get the volume we need to push to the downside, then reverse and put the squeeze back on. All right, so New York swept the low here of the pre-market range, and also a quick little sweep of a London low here. London low is back there. Right? Oh no, it's right here. No, I'm lying again. It's right there. That's quite a far ways away. Should be interesting. Okay, now I really want to check out what's going on with Chevron and Exxon. All right, they're looking the same. Wait for some more data to come in. Okay. That looks fun, huh? Fun to trade. Good old New York Open. There we go. We've also got our opening New York range here for the bit now. Trading below it. Some quick EMAs here. We're underneath now. Yeah. Get that Trump dump going. Let's see if this can make some significant moves here. I'd be curious about how this volume is playing out here. So yeah, New York, baby, bringing the heat. Like to see that, man. Love to see that. And this to me is really what the New York Open has been lacking for far too long now, is good volume at the Open. Like just not that interested. That is a massive dump. Wow. Okay, so let's start peeking around here. All right, so we're trading down now. We just bounced off this fair value gap here. It already been hit, so as per value gap traders, they wouldn't be interested in this because it's already been hit, but still looking good here. It's a row of single prints on your 30-minute chart, so that's a good sign. Single print's getting some respect, maybe not for long, but and it's pretty much been closed out. Oh yeah, that's done. We've got a fair value gap here. No prints there though. Wait a second, let me make sure I'm not lying here. Yeah, I'm not lying. Yep, single prints. That was them. It's a cute little order block there. Check out the So Specials order block. Also a bit of a base there. So that's a good looking little zone there. .5 just above it from that. And if we look at the swing, ooh, pretty much a 382 hit. What do you think? Melania and Trump coins are dead already? I don't think so. Like so the volume on them is actually not that bad. I haven't looked at the Melania one really, because the Trump one is just, I have to say, it's very fun to trade. So let's just throw it out here on a 30-minute chart. Get rid of that and pop up some volume here. All right, so definitely nothing like it was right here in these moves, but it's still, it's not bad volume, and it is moving quite nicely. If you look down on the lower time frames, I mean, if you like scalping, it's pretty much a scalper sort of paradise here, man. It's quite fun to scalp, and some of the moves are just huge once you hit them. So it's quite nice. Sosa's saying Apex. Sorry if my question's off topic. Oh, don't worry, man. There's no worries, man. I'm trying to keep my name straight, but I'm pretty sure that's Crypto Yark. I think it's Crypto Yark. Can't remember. AMZ Buron. It's either Crypto Yark or Mr. Odd, but I'm pretty sure that's Crypto Yark. Yeah, don't worry about it, man. You can always ask off-topic questions. If I ignore you, it means you're way off topic. Look, here comes the Trump pump. Look at that. Oh yeah. I mean, it's pretty it's fun stuff, man. And then once in a while you'll get these volume spikes, and yes, Crypto Yark, yeah. Yeah, so it's pretty fun to watch, I have to say. There's your hit off the 382 now on Bitcoin 15-minute chart. Let's see if we hit into this 15-minute order block. And then here we're really looking at not much. This is going to be the real zone down here, and we've got another buying tail here. Apex, sorry. All right. Apex. Do this on the Trumpy. I don't think I have Apex in here. No. Is this what you want to look at, Sos? That is horrifying. That's what you want to look at, sir? I would highly recommend you stay the hell away from that. Look at that. Jeez. You know why it looks like it's out of the Matrix? Because it's just bots. No, I'm kidding. Apex BTC. Apex BTC. I had a feeling it was crypto. Okay, what are you looking at? So where's that traded? Thinking, look at Apex BTC. Apex or Apex? Are you talking about a W formation or are you talking about a coin, Sos? Okay, the Apex. Okay, gotcha. Sorry, buddy. There you go. There's your Apex. I'm going to write that in the chat. Yeah, didn't quite hit it, but that 302, the 382 looks like it's holding. I'm sitting here looking for coins. Yeah, I got it on the W. I got it right here. Apex. I'm pretty sure that's the W you speak of. We came pretty close to hitting it. Love you, Sos. Yeah, didn't quite hit it, but you know, it's a zone. It's not really just, don't have to hit it right on. But that 382 is nice too. Clean out this little row of single prints, but that's a pretty nasty looking dump. Check this out real quick. Yeah, look at that. Wow. There we go. This is what the markets think about Donald Trump. First full day in office. Yeah. They priced them all in, and now they take their profit, ladies and gentlemen. Let's see what these guys get on about here. So, that's a nasty looking wick there. Okay, so now we swept the London low on, swept the London low. Sorry, right there on the NASDAQ. Mission complete. We got the Asia low still. That's quite a ways away. So let's see what they get on about here. Are there any differences between fair value gaps and single prints? Yes, there are. Single prints are time specific and they're like virgin areas on a daily chart, right? So so we're looking at the 30-minute chart, all right? That's how you want to look at it on Bitcoin for daily TPO charts, 30 minutes. Okay, so we've got this zone here that has a fair value gap, right? And if you look at the zone, you've got about $100. So that's going to mean that you've got at most likely about 4 single prints there, 4 blocks. And the big difference is that in a single print, this is the only candle that has touched this zone of price action for the whole day, All right, so this is your 11 a.m. candle. Here is your opening. All right, price goes down, comes up, comes down, goes up, and it leaves a virgin fair value gap that hasn't been traded through all day long. So that's the big difference, right? A fair value gap can happen anywhere. So let's take a peek here. This was a little tiny fair value gap, but there was no single prints here because price had already traded all through it. All right, I hope that makes sense. So that's the big difference. So there's a lot of, I shouldn't say a lot, but I do know quite a few fair value gap traders that won't pay attention to fair value gaps unless they've got single prints in them. For a crypto Viking, he'll pay attention to fair value gaps, but he is always looking for the fair value gaps that are also single prints, right? Which is something that I would highly recommend you also do if you're looking to swing trade more, right? But if you're a scalper and a day trader, then single prints are gonna only come up a couple times, maybe in a day, right? Sometimes in a week. So you want to kind of focus a little bit more on price action and fair value gaps in price action that are already been traded through, right? So for example, here on Monday, right, price comes down, puts in these big wicks, and then moves back down, leaves this big fair value gap here. Price comes back into the fair value gap, hits the, you know, you could call this a wacky order block. It's not officially one, but price challenges the fair value gap candle and then pushes back down, right? There's no single prints in here because it's already all been traded through the day, but it's still a valid fair value gap, right? So when you'll notice generally when I'm posting up charts in the Discord is my zones are generally fair value gaps with single prints, or I don't even call them fair value gaps. I will sometimes, but generally I'm looking for fair value gaps that have single prints in them. So anything on the 30-minute chart, and then, you know, the usual suspects, naked points of control, golden pockets, that sort of stuff, right? Hope that helps and answers your questions. That's a pretty decent little pullback there, man. Take a peek at this on the one. It's looking pretty bullish. Company Rex sent request for Trump ETF. Good luck. Good luck. Jeez. That'll take a while. That'll take a while. I think Donald is, you know, he's going to be up for an uphill battle now. He's thrown out all those executive orders. Half of them, I guarantee you, the Democrats are going to take him to court on it. So, like, some of the stuff I think is really beneficial for the markets. Some of it might not be so much. So see how he starts to go. I do love the fact that, like, as a Canadian, he's calling Trudeau Governor Trudeau instead of Prime Minister Trudeau. I think that's bloody hilarious, man. And like, I'm not a big Donald Trump fan, but He is pretty funny, man. Like when I heard him say that, yes, I've been in touch with Governor Trudeau up in Canada. That's what I call him. I call him the governor of the 51st state of America. I was laughing my butt off, man. I could not contain myself. But I think he's got a bit of an uphill battle. Like he can definitely, if he really is going to do some of the stuff that he says he's going to do, which I really don't trust anybody who's running for office, but, and I'm not really a political guy. Like I'm not affiliated with one party or another. I do vote, but it kind of depends what's happening. And I also look for competent people right now. He's going to have to get Congress and the Senate like on his side really quick, which is going to be, I don't think it's going to be the easiest thing in the world, even though everybody thinks he's got both. Well, he's got all three branches of government, which he does. But Congress people and senators are brutal, man. They have a lot of power and they will not relinquish it. So when he starts talking about, efficiency and stuff, they don't like that. They don't like efficiency because it's harder to steal money if you're not wasting a bunch of money, right? So, not that I'm saying politicians are thieves, but you know what I mean. Yes, I am. Anyways, yeah, so it'll be interesting to see what kind of a backlash he gets on the stuff that he's doing right away, and if he can actually start making a difference in energy prices relatively quickly, because that will be really the saving grace, right? It's if we can get global energy costs, I know this is not what the environmentalists want to hear, right? But if we can get global energy costs down, then all inputs will go down. And then you'll have a chance to see if these big corporations who for the last 4 years have been talking about green energy and diversity, equity, and inclusion and all that stuff, if they start saving a ton of money on their primary input, which is energy, that's pretty much any company's primary input, then what are you going to do with that? And you're going to then invest it in solar panels and other things and continue to reduce the cost of renewables and also fossil fuels, because if there's less demand for them, they'll be cheaper, right? So there's a bunch of stuff right now that is so interesting to me, not only financially, but kind of like philosophically and morally, just to watch how these guys all go about their business now, kind of like the Zuckerberg thing, where all of a sudden Zuckerberg is on Joe Rogan talking bad about the Biden administration while he's been literally licking their butts for the last 4 years, which, to some extent I get, because, you don't want the government, you don't want to be on the government's bad side, but at the same time, he's one of the richest dudes in the world with one of the biggest companies in the world, and he's bowing down to the government, and we're somehow supposed to really believe that the corporations run everything, right? So it's pretty funny. That's what I would say. It's going to be very interesting. So I think, yeah, this week, like, I know everybody was waiting for a lot of action here, and the Trump coin was really the big boy of action. I don't think this whole Bitcoin move was overly surprising, right? Like, once we'd swept that low, we're expecting to come up and really challenge. Once we'd taken out that low wick down there, we come up and take out this high. So if you want to think about this in, whatever terms you want. So if you're looking at Wyckoff theory right now, we had a spring here. All right, so we have an expansion, which serves as a spring. We come up, we take out the high. Now we're getting our pullback. And it's also the same way in reverse now, right? This is now also an expansion. So we've expanded the range after a Wyckoff spring. So, we're setting it up for movement to the upside. But we are probably going to need a pullback to gain some more steam, right? And see if we can build up for that real explosive move out of here, where we can blast off maybe to around 120-ish. 115-ish, maybe even 125-ish max. and then start to see if we can form a range again and just kind of continue this pattern. It would be really nice. So yeah, man, I am like all morning I was looking at charts, but as I'm looking at the charts, I just keep listening to news, reading articles, trying to figure out which way that this whole Trump thing is gonna blow, because it's bloody hilarious, and the comedy is golden already. That I can say. Everybody see Elon Musk do the old salute yesterday at the and everybody start calling him names already. Oh my goodness, just so wild, these guys. Okay, here it goes into the order block. That is not a good reaction. How do you explain the all-time high pump we had recently? Like I really don't, man. It's a good question, right? Like I understand why people ask this stuff. So let's get into that, all right? Because it's very so I understand why people kind of want to know about this. Like, well, how do you explain it, right? So what I would explain is, and I don't know, Marius, if you were here on the last stream, but I did the poll talking about, you know, do you think we're going to put in the all-time high on this move up? And the majority, I think it was 67% said yes. And then I also explained why I thought we would. And why I thought we would was because we've been looking at this wick low here for so long. We finally took it out. And then that's really why. So I would explain it that way mechanically, you know, just from a technical analysis standpoint, right? There's this sort of psychological factor in trading where when you start trading, you don't really need to think about psychology, right? Because you suck at trading and you don't have an edge, right? I'm not a big fan of the edge, but you know, you don't have a winning strategy, right? And then once you start to figure out sort of that winning strategy, the best way to move forward with it is psychologically, right? So that's generally when people start thinking about psychological things in the market. And then you'll quickly realize that there's three really different types of psychology in the market. You've got your psychology, which is the most important, because the other psychology doesn't really matter. If you have a relatively winning strategy, which doesn't mean it has to be, you know, let's say you've got a 30% win rate, but your risk reward ratio is 5-1. That's a winning strategy, right? So when you then kind of get that honed down and you can hold your trades for the appropriate amount of time, hold them till your take profit targets, be real disciplined on your stop losses. And then you start to look around and you start to see the differences between the way the market makers and the big money move, and then the way retail moves, and how you want to think more like big money. And so you start trying to get away from that concept of retail trading. So I understand that there's always this sort of question about what's going on here, but you have to, you know, just zoom out a little bit, right? Okay, so we're on a 30-minute chart. That's not what I mean by zooming in or out. But you have like billions and billions and billions of dollars being traded on this up move, all right? With thousands and thousands and thousands of people participating, right? So how would we explain that thousands and thousands and thousands and thousands of people get together and spend billions and billions and billions of dollars, or move, shouldn't say spend, move billions of dollars, all to accomplish a new all-time high? And I would suggest to you honestly that it's a bit of a waste of your time to kind of try to figure that out, right? I mean, it's really crazy. How do you explain that? Who knows how many thousands of people and institutions and influencers and all that stuff come together and this happens, right? So I wouldn't try to answer that question, but technically, The reason when we were, where were we? I guess we were somewhere around here. I can't remember now if that was on Sunday, but I think it was on Sunday. Yeah. So we were somewhere around here, right? And I thought that we were going to take that. And I didn't say that we had to go up from there. I said, we could get a pullback and then do it. Talked about this zone, right? And the only reason I really thought that was because this had been done already. So we've swept all the liquidity from the lows in this range. And now the only thing left to do now is start sweeping liquidity from the high, put it either continue or come back in and start to form this range, right? 7% move in 18 minutes. Yeah, that happens, right? That's not uncommon in Bitcoin. It's not at all. Sometimes it's actually surprising that it took 18 minutes. It's kind of weird, but it's true. Like Bitcoin does that quite a bit, man. I've seen 7% 1 minute candles in Bitcoin. So it's not out of this world, right? But it's just all that had been done. We had a nice pullback. That pullback hit into a big zone. Price started moving away, and then all of a sudden, it just tears off, right? So that 7% move in 18 minutes, like this is going to be a bit of a hindrance to trying to plan stuff out, right? Because this was your trade here, and you didn't know that this was going to happen, nor is it really that relevant. But when it happens, it's fantastic because so if you had gotten in on this trade, right, you would have been looking for a take profit here, guaranteed, right? And then you would have been looking for a take profit here at the previous all-time high, guaranteed, right? So price rips up there. You've now hit 2 take profits. Price starts doing a little bit of funny business up here. All right, it started putting in divs. Crypto Viking posted up that triangle chart, right? And he actually called, I think, this move perfectly. I think that was the move. Yeah, that was it on the Monday. Yeah, that was it. Or was it this one he called? Yeah, I know it was this. Sorry. That was the one he called out yesterday, I guess. But you start to see some funny things happen, right? And you start to think, okay, remember we talked about that potential swing failure pattern that was happening on that daily chart. So there's a lot of things pointing to the fact that we just swept the high and now we're going to be coming back down. So now we expect price to, when I say expect, like it's not guaranteed. There's nothing written in stone in this, right? So that's why we've got these levels. We start looking at these things right here. What's the next thing we're going to hit? What kind of reaction are we going to get? What is momentum going to be doing? What is price action going to be doing? And what does market structure need to do to start looking good for us to get in on a potential trade again, right? So what I would imagine is that we come down and hit this zone pretty much guaranteed in my mind. All right. So if it doesn't happen, it's not like I'm going to be lost for words or anything or gobsmacked. But what I would imagine that happens is that we come down here and then get a nice reaction. Then I'm going to watch for that fib to fib sort of action, right? We're going to look at the green pocket, see if we can take that again. If we can take that, get above it, then it's continuation from the golden pocket, hopefully to the upside. If we lose the golden pocket, then we're going to come down and test these lows, right? There's a nice buying tail here. There's a lot of liquidity down there. We've got a lot of people who are in longs right now that probably deserve to get taken out because they haven't taken profit yet and they're convinced we're going to 150,000 or something, right? So, pardon me, but that is already getting into like a whole can of worms that, that this doesn't really matter at the end of the day because you're never going to be able to predict these sort of things, right? They're not helpful for trading. That's what I would say. Now, when I say that, it's because this is at 6:30. There's nothing happened, right? on Tesla next week, something big is going to happen, and you might get this on a 1 minute candle sort of thing, but it's because earnings are coming out, right? So don't be trading it. Don't be trading CPI data. This stuff will happen during CPI sometimes, right? That sort of stuff. But when this happens, like I would say it's just we've come up, we've put in a potential M formation here. We come down, we bounce off of a old support zone, right? And the other things that were down here that we were looking at, right? And then price uses that as its launch pad, and then all of a sudden everybody kind of just decided to go in full steam ahead and push it up to the upside because they were expecting a sweep of these highs, right? That's as simply as I would look at it, but I really wouldn't try to overanalyze why things happen in the market in terms of movement. All right, what you want to think about, I shouldn't say what you want to think about. What I find to be helpful, right, is to understand, all right, let's say you got in on a long here, all right, where a good trader's going to have their stops? Where are bad traders going to have their stops? There is a backstory. He says, just interesting to get viewpoints on such moves. Oh yeah, there's going to be a backstory guaranteed, right? Like you could go fish out the data on the blockchain and see exactly what wallets were moving what where, and where everybody was buying, sort of thing. That you can figure out, but it's still not going to help you at the end of the day because you're not going to be able to say, why did they do this, right? Like, so I couldn't explain anything without telling you why it happened, right? Like, so why did this happen? I don't know. I don't know why everybody decided to do this, right? Because for me, it could have happened here. Could have had a big push up there to break out of this zone here. We could have done it here to break out of this zone here. But instead we had this big move down. We put in our Adam and Eve, and then price goes on up, right? This is a great pattern here that a lot of good traders use. All right, the Adam and Eve is not something that you'll generally hear talked about a lot on YouTube or by influencers, but it is a great reversal strategy that a lot of good traders keep an eye out for it, because it really is a W, right? It's a double bottom and a W. It just presents a little bit differently, and it's a big reversal pattern. So that might have got people excited. Who knows? So once we take out the apex, close above it, finally, people just said, that's it, we're going. That's what I would say. So back to the what is happening stuff, like that's how I would look at it. Is, so let's say once again you get in a trade here, it's what is happening on this move up with stops, right? So bad traders have their stops down here. Let's say by the time you get up here, right, bad traders will have their stops here, and they'll have their stop sort of trailing it by like $200. And wanted to join in, says Oddbjorner. Yes, that would have been, a lot of people would have been jumping in here, catching that momentum, right? That's for sure. A lot of people would have been FOMOing in, right? But the trade was here, right? All the preparation and TA told us that this was the zone down here, right? So by the time you're here, you're already too late, and it's just FOMO guys getting in there, right? That would have helped push it up for sure, right? But it, what I would say is take this trade, and then when this happens, call yourself a genius. Yeah. But back to the stops, right? So bad traders will be trailing it up way too close, so they're going to get taken out real quick. Bad traders, isn't it just logic? For stops, no, not really. I would say there's a good way to use your stops, and there's a bad way to use your stops, right? That's what I would say. So bad traders. So let's say this move is all the way up here, right? If you have your stop loss here still, you're a bad trader, right? That's what I'm saying. I'll tell you why I call them bad, because if things turn around here, so okay, so let's say price is like up here, all right? You're up 14% on a trade and you haven't pushed your stop loss up yet. It's not good, because this can definitely come back down, right? So this is a huge truth of the market, all right? You put in a low and price moves away from it quickly. Many times the market will come back and retest this low. All right, so if you've got 10% on a trade and you haven't taken profit and moved your stop loss up, it's kind of crazy. You're just inviting the retest to come down and ruin your dreams. And then once it's down here, you know, you're going to be already in a bad spot psychologically, because you were up 10% and now you're going to be praying that it doesn't go down. So if it starts sweeping this zone here, you know, you might close it out. Yeah, bit trailing the stop is also bad. It sounded like you also said. No, I didn't say trailing stop loss is bad. I say trailing too tightly is bad, right? Like if you're trailing your stop by 200 bucks on Bitcoin, it's not a good idea, right? So if you haven't moved your stop up here, if you're not trailing it with a decent enough room, right? You've got to give it room to breathe, right? So if you're just like, you know, we put in a high, we break it, you put your stop loss right here, you know, that's a horrible place to put a stop loss right here after this pump. All right, in this case, you don't pay for it, but you should have your stop loss here, right? And that's because you're too, right? You put in the low, you come up, you put in a low, you put in a high, you put in a low, and then you pump. So at this point, if you're manually doing it, you put your stop loss right there. You should also have taken profit already on that trade, right? And then you put your stop loss up here, 2 lows away from where price action is, right? Price starts moving, it pumps up and goes, right? So this is a good example here. You have a low, a high, a low, a high, and then ranging around. This is not where you want to put your stop loss. Your stop loss is 2 lows away. That's how I killed some USDT from my wallet, too tight stop loss. Yeah, you need to give it a little bit of room to breathe, right? It also depends on your entry. Like this is a pretty tough entry where you need to give yourself some decent breathing room here on a stop, right? If I'm getting in on a very specific level in a very tight area, then my stop loss is going to be tighter, right? But your trade will be invalidated really quickly. You'll figure that out really quickly, right? So once price then moves away from here, right, and starts doing all this, that's when you put your stop here, right? And then now you've got this low, high, low, high. So now you put your stop loss just below this low here. All right, then you get a pullback, break that high, and now you're going to put it up just below this one. So you trail it up 2 lows below, because a lot of times they'll come down and sweep one of the lows, right? And why is that? That's because we need liquidity, right? So price moves up here, puts in a low, puts in a high, starts ranging about a little bit, comes back down, tests this low once again, but it can't find the juice to keep going, even though the market wants to move up. It's not got the liquidity, so it's got to come down and sweep some lows to grab up that liquidity. And it could have easily swept this low here too. So this was the place to have it. So the bad traders will trail it too tightly, or they'll manually put it up too tightly, and they'll also leave it down here, which is just crazy, right? Because all of these gains that you've made, you know, all you need is one 30-minute candle to destroy all of that, right? So yeah, it's very, so that's how I would think about it, right? Where are bad traders going to have their stops? That's the first thing. And that's one of the big things about liquidity. Yep, okay, thanks. To lose and to tight stop loss seems to be a bit of an art form as well. Yeah. too loose and too tight. Yeah, sorry, too loose. Yeah, it's definitely true, right? The stop loss is an art, and it really depends on your entry. Like, what is your entry criteria? So, that's why you'll hear me say stuff like on the 20 EMA. If you're getting in on the 20 EMA, then your stop loss is going to be candle based on the candle that you enter, right? If you're getting in on a golden pocket with a fair value gap, an order block, and a naked point of control, or some single prints or whatever, you might have to widen that up a little bit, but you might even be able to tighten it quite a bit, right? It really depends on the time frame and then what kind of price action you get when you hit into it. So it is an art form, right? And then to follow it, sorry, I keep hitting my desk, guys, if I'm making noise. It's because I'm talking with my hands. I'm getting passionate about stop losses, which is kind of creepy, I'm not gonna lie. I like the trailing stop loss approach, says Marius, but that's also pretty delicate. It seems to pull off correctly. Well, it's almost impossible to pull it off correctly unless you've watched price move away, right? So a trailing stop loss, because a trailing stop loss doesn't really use information, you're just putting an arbitrary number up for some reason, right? So in this case, you get a big push away, right? And then you stall here, and then you push away, and then you consolidate, and then you push away. So if you're using market structure, it's a lot safer, right? I shouldn't say it's a lot safer, but it's a lot more logical to use market structure and think about zones of liquidity that are going to potentially get swept and stop hunts are going to occur at, than to just use an arbitrary percentage or dollar amount to follow it up by. But that's what a lot of people do. A lot of that's bad trading, right? It's bad trade management. It might be good for you at first when you start because it's a lot to think about, right? So when you first kind of get your let's say your strategy starts to form, let's say you find something that works 50%, 60% of the time. And so you've now got a winning strategy. You want to start trading, and then you're going to have to really refine that strategy through risk management and psychology. So without the setup, it's worthless, right? Thinking about trading psychology without your setup is kind of weird. But once you have that trade setup, then you start to practice that paper trading, and you try to refine it as best you can with your stop losses, your management, all of that sort of stuff. And then you have to be true to yourself, right? You got to be honest with yourself. So for example, if you're working, right, if you have a full-time job and you take a trade on your lunch break, let's say, for example, we'll use this setup here, for example, right? So here's a zone. We talked about it. It was all public information that we shared, right, on YouTube and everything. So in this zone, you take this trade and it's your lunch break, let's say, right? Let's say you live in Asia and that happened around your lunch break. All right. I personally wouldn't put a trailing stop loss on this and then go back to work and hope that everything worked out great. But what I would do is put a bracket order in, right? So here's my entry. I want take profit here, and I want take profit here, right? Is that greedy? Yes. Right. So let's say you hopped in around there, right? Is it greedy to want 6% take profit? Yes. All right. Is it greedy to want like 10%? Yes. Or 8, 9%, whatever that is, right? So that is not very realistic, right? So I would be looking for a take profit somewhere down here, take profit 1, take profit 2, take profit 3. Have that all set up, right? And then your stop loss can stay down here, because once you hit take profit 1, your chance of losing, doesn't go away, but it decreases. And then once you hit take profit 2, everything's good. And then once you get off work, you see you've already hit take profit 3 and price now may be moving against you. Do you want to fully close this trade out? You might not want to, because again, we've still got some single prints down here to get through. There's all kinds of reasons why you might not have wanted to close it out. For example, I don't really close out my trades on Bitcoin. I get stopped out on them. So that's the way I play it. And then you start to see price moving down like this. Maybe you want to move your stop loss up, right? But where are you going to move it? So high, low, are you going to put it here? It's a pretty horrible price action here to be, there's no real pullback here. It's pump, consolidate, only a half hour, and then rip. So you're looking at this as a massive row of single prints. It comes down, gets killed. This is a consolidation, row of single prints. It comes down, gets killed. So at this point, I'd be putting up my stop loss to like maybe break even or even just below that. And I'd be willing to take a small loss on a trade that I've already taken 3 take profits on that fourth one, right? So you got to consider that. It's not, because this could have easily turned around here and come back and retested this. So if you're trailing your stop, you still would have made a small amount of profit here, but you would have got stopped out early. So that whole premise of, watch what is your trade plan, right? If you journal out these ideas, right? Look at your trailing stop loss, but you've got a plan in mind, right? We've got this double top here pretty much, all right, like an M formation. Price comes into the zone that we're looking at, and that's really what we're targeting, right? That is we want to see what's this high gonna do, right? It's not that we're convinced that we're gonna take it. We've got an idea that we might, because again, we've taken care of all the liquidity to the downside, and now we want it from the upside, right? So that's really what we're interested in, is this zone here, this order block. What are we going to do to this order block? Is it going to hold, or are we going to take it, right? So it rips, takes it. That's what you're looking for. So in this case, the trailing stop loss, you might want to put it, like, widen it out a little bit, or just think about trade management manually if you can. Now, if you're working, you really can't think about that, right? So you put in your bracket orders for take profits, and you can put in a trailing stop loss as well, but widen that up quite a bit, right? Give it lots of room to breathe, because these little consolidations here are brutal. And this is the first real pullback of this move, right? So it's kind of nuts right now. Let's say you did open this, you haven't had a chance yet to move your stop loss up at all, right? This low gets broken. Now it's this, so what we have to do right now is put in a higher high compared to this, and then this might turn into our low, which then you could bring your stop loss up to that. All right. And in the swing scheme of things, right, it's pretty weird, but it's kind of the way it goes. So yeah, it's not it's not really rocket science, but it is a big mistake that people do ride their stops too close, and then they don't move their stop losses, because they will hear things and interpret them the wrong way. Like like, who was it? Paul Tudor Jones? I can't remember who. No, it wasn't Paul Tudor Jones. Might have been Mark Douglas, I guess, but I can't remember. But they said, have your buy order where everybody's got their stops, right? So in this case, everybody's going to have their stops right down here somewhere. They might look at some market structure just a little bit further back here. All right, so they might put it below this low here. And so when price comes down here, that's where you're ready to buy, right? Meaning that if people get in on this trade and they're looking to ride it all the way, they might put their stop loss quite a bit away here. But what I would suggest is that if you take profit while you're moving on up, as opposed to waiting for it, all right, or trailing it, is that if price then turns back around and does come and retest this zone, you've already gotten one trade out of that zone, and you look to take a second trade, right? that's really it for me anyhow. It's the same thing here. We're all looking at this zone. This wasn't a 0.5 before, right? Because we were trading it from here. So this was relatively nothing on a fib. Price hits in. This is what we're looking for. Now price might come back down here and retest this. So get some profit out before your greedy target finally gets hit, right? Now that's going to fly in the face of some people that you're going to hear from, right? Like Paul Tudor Jones, Tom Hogarth. These guys all preach a little bit of a different thing about pushing your boundaries psychologically, right, to get those huge winners. But what I would say is that those guys are filthy stinking rich, and they can afford to lose 90 grand in a day. And if you can't afford to lose $1,000 in a day, then your psychology is not adapted to doing the crazy shit that those guys do, because you just can't afford the pain, right? So I know Tom Hogarth's got like a pain scale, and he's got all these things about pain. So think about that, right? The difference between somebody in your position and somebody in Tom's position, right? So what I would say is, yeah, man, take some profit out. You don't have to move your stop loss up just yet, but take profit on your first take profit, just relax, take the profit. And then once you hit your second take profit, put your stop loss into profit so that if price comes back, you're okay. That's what I would say. And then really use market structure, which would be impossible here, but might get better. Yeah. And one thing I would do, honestly, with the trailing stop, I wouldn't use a trailing stop. Like, I don't use trailing stops, I'm not going to lie, but I will manually trail. All right. That I will do, but I like to manage my trades manually. But what I would do is I wouldn't have a trailing stop loss until I'd hit take profit 1 either. I'm not sure if that's what you do, but yeah, I wouldn't instigate that until I hit take profit 1. Then I would turn it on. I think it was Dr. David Paul that said to put your entry at stop loss. Yeah, it could have been David Paul for sure. I love that you say Dr. David Paul too. Put a capital in that Dr. Marius. I'm kidding. But yeah. That definitely sounds like Dr. Paul. So yeah, that's what I would say. The stop losses, like risk management, is the most important part of trading at the end of the day. It really is. You can find strategies that work relatively easily. Then you have to really figure out how to milk those for everything they have, and that just comes with time and using the strategy, and then going over your data in your journals, right? One thing I found this year, which has never been true before, first time it's happened. So I actually made more money this year trading NASDAQ futures during London than I did in New York. All right, it didn't have anything to do with my stop losses, but it's very interesting that happened. So I still made money in New York, but I also took some pretty stupid losses. And a lot of the trades were just because of psychological stupidity, because I'd have such a great session in in London, that then in New York, I just felt kind of loosey-goosey and, Mr. Invincible sort of thing. So took some stupid losses this year in New York that I was just looking at trades going, really? I took that trade? That's crazy. And then I remember myself actually saying, I remember I'd be trading with SOS and I'd be like, this is a really high risk trade. And I'd take it. And not only the losers, but a couple of the winners that I had, I was also looking at going, damn, I can't believe I took that trade. And they were like pretty big wins. Didn't even themselves out. Generally the stupid ones didn't do well. The winners compared to the losers, I definitely lost more. So now I have to kind of question myself, right? And say, okay, what happens if I have a really good London session, should I just not trade New York and just walk away for the day, right? And the answer to that is yes, right? That's what's going to happen. Now, does it have to stay that way? Not necessarily. I can come up with new parameters for myself for New York that I have to be super disciplined about. And if I break them, then I have to just not trade New York for a while, come up with some sort of reward and punishment scheme for myself, right? And do that. But so, yeah, my point with that is, journaling is going to let you really allow you to see that sort of stuff, right? So, yeah, that's the key, man. Journal, gentlemen. Journal, and you'll start to see. And also look stuff up, right? Research risk management. For those of you who have taken our course in the Norwegian language, don't stop there. Don't just kind of look at what we say about risk management. Like, really get into risk management deeply. Like, it is the biggest part of trading. It really is. Because if you can manage your risk properly, and I mean in all the senses of it, right? Like, risk management is about risk reward, right? It's not about risk only. So I guess a lot of people see it that way, right? But it's really not. It's about risk reward and how you manage that whole aspect of trading, right? Which is really where you're going to start to see that you can make a lot more gains, right? And that's one of the other reasons you'll hear me say I really only look for swing trades on Bitcoin, right? Because it's just a lot easier to get much bigger risk reward ratios. Like, if we stay in a range right here, we're in a 20% something range here, from the absolute bottom to the absolute top, 23.38%. So the David Paul stop loss video above. All right. So yeah, look, don't ever stop thinking about risk management, man. Honestly, it is so important. Risk management, journaling, and psychology, like, they're all really, really, really connected. Because if you can, if you can journal stuff down and then make mistakes and go learn from those mistakes, your psychology will generally not be negatively affected, right? You won't be afraid because you're learning. It's all part of this process, right? And then your risk management, as long as you are analyzing how your trades go and how your risk management is, getting better, or it's getting worse, or it's kind of just stagnant, then you can use that to look for new ways to try to really squeeze everything you can out of a trade, but at the same time making sure that you've paid yourself, right? Like, it's very important when you first begin. Now, when you've got $150,000 that you can just piss away, like Tom Hogard, then by all means, just double down. High risk trading, right? But it's not the best way to start trading when you're trying to build up a small account where you're just getting your feet wet. And I know that some people will say, well, it is good because you're going to train your psychology from the very beginning, right? But if you're not that good of a trader in the beginning, which nobody is, let's be honest, it's a way to blow up accounts and get your psychology to go into the tank. So that's what I would say. I was actually thinking about that after watching your stream discords from earlier, being so happy about London and taking it with you into New York. Yeah, it's a problem. It's a problem I have. And for the most part, it worked out well. Like, I only had a couple of nasty New York days last year, but they're enough to kind of just make you look at it and say, why would I piss away what I worked for in the morning? Just walk away from it. So yeah. But now I have to be honest with myself, right? And think about, can I overcome that? Is that something that that would be hard for me to overcome? I don't mind taking losses, and I think that's the that's really the point that hurts me, is because I shouldn't say that, because you have to be able to absorb losses, right? But like, it doesn't really bother me when it's happening, right? So I'm in New York, I lose 3 or 4 in a row. It doesn't really bother me that much. 6 in a row, that's where I start getting a little bit weirded out. But so I don't mind taking them. The problem is the winning, right? It's the winning that, you hit that 150 pointer in London, and then you come to New York and you're like, all right, the casino's open. Now I can really catch like a big, maybe 400 pointer here, which, that's not the right mindset. So I've got to address that this year, right? That's the big thing that I'm going to be working on this year, is that. And also working on my risk management, right? That's what it is. That's what it really is. And by working on that risk management, I'm going to fix that psychological aspect of my trading the New York session, which might be just abandoning it altogether, but I don't think so. I really don't think so. But what I'll do instead of Funky Pants says, thanks for going over about this stop loss. I find myself moved the stop loss too tight too many times, at least learning little by little from it since I'm aware of it. But for me, it's maybe more about psychology. Yeah, it really is for the most part, right? Like, that's, that Mark Douglas experiment where you have your, you get your setup and then you bracket order the setup, right? You don't necessarily have to put in the bracket order when you open it, but you know that, like, for example, this is your take profit 1, this is your take profit 2, which is closing your trade out, let's say. All right. And then your stop loss is going to be wherever down here, right? You open that trade and you just don't touch it. You just let it go. Never move your stop loss up. Don't touch it. And just gain confidence in the idea, right? Win or lose. So you do that 20 times on the exact same setup. And let's say you win 9 times. You've got a 45% win rate, but your risk reward ratio makes it so that you've increased your account by 10%, let's say. Then you're going to be fine with that psychology, right? Of just letting it go. You don't have to over manage it, right? That's the thing. Like, and then you have to also be aware of different trading styles, right? So if you're scalping, it's much more management intensive. If you're day trading, it's less. And if you're swing trading, there's very little management. You really just need to let the thing kind of go, right? Take your entry and then let it go. And then once you hit your first take profit, let it go. Once you hit your second take profit, move your stop loss. And that could take days, right? Could take days of you doing nothing, just watching it. So don't just watch it. That's the, don't watch it. Go look at something else. You open a swing trade on Bitcoin, go look at some alts, or go study, go do research, open up your trade journal, look at your old trades, right? Yeah, I have started doing that. Put out my bracket orders and have the trade set and planned. Yeah, that's the most important thing, right? The trade has to be planned. If you're not planning the trade, then your risk management is non-existent. So that's it. Now, if you're scalping, right? So like, you don't have to have it written down in your journal. And that's what I'm kind of trying to get at here with the scalping. Like, so when I'm scalping New York, for example, all right. There's not much happening here right now, but we'll take it from here. Yeah, Mike Tyson, that's a great line. Everyone have a plan till they get punched in the face. That weirded out feeling started to identify it, so I know when I gotta get the hell off the computer. Yeah, this is very very true, Patch. You know, and that's really you being honest with you, right? If because and sometimes it's hard to see that stuff, right? So here is our previous day's close, all right? Okay, here is our pre-market open. We come down, we hold that previous day's close on the New York Open, all right? So I'd be looking to scalp that little bugger, but I'd really be getting out of that really quickly. And my plan would be, you know, maybe 20 points. Okay, so once this wicks down and starts pulling back up, right? Let's say I get in a little bit late on the wick, right? At 18 points, I wouldn't have hit my take profit one. But as price is moving back up, you're damn right my stop loss would be like in profit pretty quick there, right? But that's because the New York Open scalping is just so brutal and fast that you've really got to do that. Would I be looking to take profit off of a previous high? No, I really wouldn't. All right, and then price rips to the downside. Finally, you get out of that New York Open sort of half hour, and you're putting in these nice moves to the downside. All right, you get a pretty decent looking opportunity right here. All right, 618 inside of a fair value gap. It's the same setup all the time on this bloody NASDAQ. All right, you hit that. And now what am I targeting? I'm going to be targeting that low. Right, so that's like my automatic plan, right? That's going to be my target. Now then I have my secondary plan, which keeps me safe. All right, so that's 63 points. That is not going to be my first take profit. New York, my first take profit is 25 points. Not when we're trading inside of that open, right? So you quickly get your first 25 points out. Price comes back, does not quite hit that, so it's not touched my stop loss yet, and I wouldn't move my stop loss yet, right? I've only hit my first take profit, hit my second take profit here, and then I move my stop loss. In this case, it would be a little bit tough because we had come back in. So my entry is pretty much that first pullback, right? So if I was to be looking to trail this two lows behind, it'd be a bit tough. So at that point, I would be moving my stop loss up maybe like 50 points in profit or so, something like that. Just keep myself safe, right? So that would be scalping it. You're just in there. You've got to really manage that quite heavily, right? And I mean, that's such a great trade. Look at that. I'm sitting here talking to you guys, 110 points off a golden pocket in the fair value gap. Same thing every day. So yeah, I'm just saying there's sorts of ways that you can really mitigate your own sort of shortcomings, right? And that's how I do it. That's what I'm looking for, but I'm going to grab 25 quick points because even then, if it comes back to stop me out, I am still going to be making profit on that trade, right? And it's a definite possibility. Like this would have had me questioning my trade here, but then it turns around and works out quite nicely if I had taken that. Not that I took it, right? Then if you look out, you know, and that's not to say I'm only looking for those opportunities on the NASDAQ, right? So you're going to see things like this, which is a quite easy trade to take here. All right, same thing. Fair value gap, 15-minute chart, golden pocket. That's a banger of a trade. But it happened at 1 a.m., right? So I'm not only trading the NASDAQ on the 1 minute, I'm also always looking, you know, you're always looking, zooming out, looking at larger time frames, right? And so if I had to hit this, you know, that would have been totally different. I would have been looking now at a 15-minute chart. I'm not scalping this, even though I'm entering it as a scalp. My whole idea is going to be based on a much broader idea here, right? Where you're looking at getting a couple hundred points before you finally take your first take profit, which would have been, we hit that deep end of the golden pocket. I'm waiting for the deep end of the green pocket. Hit it, first take profit. It then pushes above it, keeps going. Then I'm targeting this high, right? Or I should say this order block, right? Massive order block. You really want to see what kind of reaction you're going to get up there, right? So in this case, you're not managing nearly as much. And once you hit your first take profit, all right, at that point, you know, you have to be moving your stop loss up. So now you start thinking, well, that's kind of not really what you've been saying, but right, that's where I'm going to move it up to, and that's already huge. So you're looking at, you know, 93 points. I would kick myself in the ass all night long if I had just hit like whatever 200 points profit on my first take profit, and then I left 200 points on the table when it comes back and closes me out, right? 93 points, that's much better. At least I wouldn't beat myself up, right? That would be it. So I hope that makes sense, right? It's every trade has to be slightly specific, but at the same time, you can have different parameters already kind of really set up for, you know, this is obviously a day trade. That Bitcoin example we were talking about, it's obviously a swing trade. And then that previous NASDAQ example we're talking about is obviously a scalp, right? So, and then if I was trading London, my bracket orders are different, right? Because I'm not looking to get 25 points out of a scalp off of London for my first take profit. Depends on price action, but usually it's 15, sometimes it's 10, right? And 10 points is a great trade anyways. So yeah. And then what kind of decides that, right? If you're looking at London, okay, so here we are in London. If you're looking at London and your average true range is really small, if it's smaller than normal, but I still have a nice setup that I want to take, then I'm going to take my first take profit a lot quicker than I would if London was putting in some big beefy candles and your average true range was quite better, right? So that would be it. So I hope that's helpful, right? It's you need to have a bit of a dynamic sort of thought process on this stuff, right? Examples like okay, so let's talk about this okay, so when this happened here, was that it? No, hold on a second. No, what was that? So was this the cup and handle we were always talking about, or was it the one down here? I can't remember now, but neither here nor there. Who cares? So you've got that. It was this one. It was this one on the low. So Sos and I talked about this all the time. You've got this ugly cup and handle here, right? So once this happened, then, you know, we were constantly talking about the handle, the cup and handle. And then obviously it worked out. No guarantees, but it did. So that's always nice. And so now your target here, okay, is going to be 80,000. from this cup and handle, right? But there's your entry. Okay, price goes up. You see how it comes back and tests that again? Like, it's really quite wild how it really likes testing things, making sure, right? And old all-time high. Yeah, this one was that guy. Yeah, that's right. So, that can't be your first take profit. You know what I mean? But if you're watching a lot of these YouTubers and influencers, like, they don't really talk about this stuff. All they say is, here's our target, guys. And it's a bloody stick. Look at all of this. You come up, you should have been taking mad profit on the way up here. And then you're looking to add to this trade on these pullbacks, right? That's the kind of stuff you want to learn from Tom Hogarth when you're looking at this, right? It's not high risk trading, right? All right, so then now you've got this cup and handle, all right, the one that takes us to 250 or wherever, the one Sos is waiting for to finally take profit. No, I'm kidding. Sos already took profit, man. Okay, so now we get this, and you start to see it kind of all playing out again, right? So it's the same bloody, oh no. So it's the same cup, just it's deeper, and now we've got a bigger handle on it. Let's get this as precise as possible. All right, pretty good. Good enough. All right, so there's our target, ladies and gentlemen. 2 million, no, I'm kidding, 120,000. All right. So price starts to break out of this, right? We'll call this the high. This is the, it's the special needs cup. It's the kind of sippy cup we had at special day camp. All right, so let's say you break out, right? You get all this move up here. You cannot be waiting for this to take profit, right? And I know that's everybody in here pretty much knows that, but it's one of the big problems of the crypto space is that nobody really talks about this stuff. They'll just say, guys, the breakout is happening. Of course, I'm going to tell you what we're looking at, and this is our target, right? It's a bloody stick, man. It's a horizontal line. You can't really base risk management on this, right? So it's pretty wild, man. It's pretty wild. Now, are we going to hit 120? I think we will. Are we going to hit it now? I have no idea when we're going to hit it, but definitely I think in this bull run that this is in the cards. I think maybe 125-ish, maybe even higher, who knows? But the point is, if you had been not focused on this crazy idea down there and you were watching price in this descending channel, you could have been hitting longs, you could have been hitting shorts, you could have been hitting long shorts, just watching it play out, hoping that it gets to your target is kind of crazy, right? Yeah, I knew it, so I knew you had your take profit one at 121. I knew it. Yeah, so that's it right now. The other thing that's really tough here, right, too, is you don't want to take your profit too quick, right? Because you don't want to get too emotional about it. But you see that that's what people do. Like when we were here, man, like we would be seeing Frank and Henrik. They freak out about everything. Henrik not so much, but Frank would be like, "Oh my God, we've got a candle that moved 2.5%. That's $1,000. Oh my God, what's going on? Should we sell our positions? And it's like, well, why would you sell your position, right? If you're hodling, then just chill out. It's, we're putting in bullish market structure, and now we've got a corrective phase. It's just chill out, man. It's just getting started. And then price goes up, and then all of a sudden, the excitement comes, but the other way around, right? And Oh, I should have bought more. Well, you should have been buying at the lows and selling at the highs. You know, it doesn't mean you have to buy more Bitcoin here, but you've also got USDC or USDT. You can be trading this on that, right? That sort of stuff. And then here it's the exact same thing, right? It's here we are in this massive range. We haven't quite hit our target on the cup and handle. Are we going to hit it this month? I don't know. Are we going to hit it in March? I don't know. We might not hit it at all, right? So who knows? So instead of thinking about that, right, I've still got my BTC long open, which I'm really kind of, I can't say pissed, but I didn't catch this trade here because of the time, right? Would have loved to get in on that. That would have been great. I did get in a little bit later, but price might still come down here. So I don't have all my BTC in a long right now, but I'm trading this on USDC and USDT, right? So that's really it, man. Anyways, guys, this has been a fun 2 hours here. That's quite a lot. I'm going to see if I can maybe catch myself a cute little NASDAQ long here. I'm guessing that's what we're going to be looking for here. We've gone down and taken the lows again, so maybe not. Might be the actual turnaround day here. We can have our first red day. This might be the NASDAQ starting to look for the dumpy dump, which is always nice after you've had a nice big move. 5 days straight of up. Maybe now get 5 straight days of down. Let's check that out. But as a beginner, it's hard to fathom the adding game. It's more like in and out, reset, and not always in taking profit and adding. Yeah, well, I get that. That I get. Oh, I missed 2 hours then. Yeah, you did, Majid. Holy, you are very late, sir. Very late. Welcome, my Persian brother. Yeah, that I understand, Marius. I really get that. But I think that's one of the problems too of coming from the sort of a crypto influencer space is that people don't, you know, nobody really teaches you how to trade in the crypto space. They teach you about these patterns and breakouts, and then these, you know, targets on a stick. That's generally what you see. I'm not saying all of them, right? I shouldn't say that. Like if you go look at like Chart Champions or Tino, Traders Reality, they don't talk about any of that stuff, right? But you know, you'll often see that's how they really set up their take profits, right? It's like you know, which is not, you know, I'm not saying never do it. It gives you a somewhat a sense of what's going on, but if you're looking for these huge moves, you know, like this this channel here, you know, like it just kind of doesn't make that much sense at the end of the day if you're not going to really capitalize on this stuff, right? Actually, we'll do it. Okay, I'm just going to do this, then I'm going to get the hell out of here, guys. I'm way past my afternoon coffee time. I'm starting to get grumpy. No, I'm not grumpy yet, but okay, so let's say you're looking at this as an expanding wedge, right? And then when it breaks, you're going to catch the move off of the break, and then you're going to pull it down to measure the channel, right? Okay, and then that's going to be your take profit, right? So if you're closing out the trade there, you know, congratulations, it hit, but then you miss all of this, and then on the pullback, right? So I wouldn't close, you know, I would definitely have taken profit, but way before this too, right? That's just a monster move, right? 38%, geez. I would have taken at least 2 take profits, but most likely I would have had 3 by the time we got up there already. And then I wouldn't be looking to close the rest out. I'd be looking to add to it if we could get something like this happening and forming a range. So yeah, that's what I'm trying. That's one of the reasons I'm saying that, you know, get your entries going with your planning. And then when you're doing your planning, you're going to see all this stuff happen in your journals, right? I took this long, right? Like this is a pretty decent looking pattern here, right? Okay, it's a cute looking harmonic here. It's not a great one, but it looks kind of cute. I'm not going to draw it out, but so price was coming down, came back down. We hit into this wick, right? We create a buying tail, let's say, and you get involved here and you're trading it up and you're waiting to see if this pattern works out or nothing or something. And then you get the signal that it is indeed going to work, right? So you hop in on a short here, you've closed out that long, and then that short barely works, right? The only thing it really does is hit your take profit 1. It doesn't come down to take profit 2, and it definitely doesn't come down to take profit 3. So you get your W now, and it turns back around, right? And keeps going. So, you know, it's a little bit kind of hit and miss if you're not really looking to hedge and play the long game, right? I'm not saying don't take this short. What I'm saying is being a long from here and then being that same long by the time you get up here, right? And when I say that, right, you know I'm going to hear, what about fees? What about the, you know, funding and blah, blah, blah. Yeah, like you got to take coffee. I just read coffee. Thanks, Marius. I'm going to take coffee. You got to take profit and then re-add. And at the same time, if you're shorting on USDT, you're going to more than make up for all the fees that you're paying and the funding rates and all that stuff, right? And sometimes the funding rates go negative and then you'll get paid. So that's great. Anyways, much love, guys. Gonna go drink some coffee. We'll see you tomorrow in the VIP. I don't think I'll be able to do a New York live tomorrow because I have to go to the hospital. Not for myself, nothing serious, but gotta take my mom for a battery of heart exams just to make sure she's doing all right. So I'm gonna be hanging out in my favorite place in the world. Yeah, the hospital. So if I'm back in time, I will do a live, but I'll probably just do it on the Discord. Join the Discord if you like what you're seeing. You'll get a lot more of it in the Discord. And yeah, that's about it, guys. Be safe, be well, and talk tomorrow, man.